Hello, everyone. Welcome back to Navellier Market Buzz, episode 10. Thank you all again so much for joining us. Excited to be already at episode 10. I'm Crystal Navellier. I'm joined again this week with my father, Louis Navellier. Dad, we have to talk about November. What is this month going to bring? Is it looking good? Let's talk about it.
Well, we're off to a great start based on what happened on Friday. November is a seasonally super strong month. We have a chart we're showing everybody from Bespoke, which shows in the last 10 years how we've steadily risen almost every day in November. And the reason November is so good is there's still earnings coming out. We often get an early January effect, which is a surge in small caps. But November's a happy time of year. It's a time to get together with friends and family, and because of Thanksgiving and all. And it's just again a wonderful time of year, and the market reflects that. If the consumers are happy, the market's happy. So simple as that.
Now, what did you think of the October payroll report?
Well, that was devastating. It was only up 12,000, but there's so many seasonal adjustments. I'm sure it's going to get restated. I think the big news wasn't so much the October payroll report being disappointing, is the revisions in August, September were severely down. The government keeps overshooting its mark. Early in the year, they overstated jobs by 818,000 trailing 12 months through March. So, the government has all these weird seasonal adjustments, but there's no doubt the payroll report was held down by all the Boeing layoffs. It was also held down by a continued contraction in manufacturing. 46,000 manufacturing jobs disappeared. The other comment I have about it is that Hurricane Milton did screw up the data. So this is going to get revised again. But probably the most frustrating thing is despite this horrible payroll report and the number of unemployed going up by 150,000 on a cumulative number, they wouldn't raise the unemployment rate because they rejiggered the size of the labor force. So was very, very frustrated, and it was just confusing. It's not a good report for Kamala, but a lot of people have already voted.
Now, what did the ISM manufacturing report show?
Shows that we're still in recession. It fell again, and we've been in recession for over 2 years. Some of this is related to housing. When the housing turns down, people order fewer appliances and things. That's why the election is going to be determined by the manufacturing states, the blue wall, as they call it, Wisconsin, Michigan, Pennsylvania. And it's there. This is part of the country that's very frustrated. It's not as prosperous as some other parts of the country. So we have to fix this. And the first thing to do is fix the housing market. The second thing to do is lower interest rates so people have more access to credit. And then we can have a manufacturing turnaround. Of course, we can also onshore. One of the biggest onshores that the Biden administration was pushing was Intel. Well, guess what? They just announced another third quarter loss. Okay. Furthermore, they had another round of layoffs, thousands of people, and they're being booted from the Dow. NVIDIA is going to replace them in the Dow. So, that's why onshoring didn't work in the case of Intel. And it's really sad. I was in Central Ohio where the Intel plant was supposed to go in, and one of the reasons they couldn't break ground on the plant is the Defense Department reneged on their commitment to order 2.5 billion in chips from them a year. So, it's funny, the government passes one incentive to onshore and to rejigger America and get us growing again. And then another division of the government, namely the Defense Department, goes changes its mind. So it's very frustrating, and I feel bad for Intel, and I feel bad for all those people getting laid off. But there's definitely a problem with manufacturing.
What do you expect from Supermicro's official update on Tuesday?
Well, I expect that they will announce they have a new auditor. I think they've engaged a new law firm, and they will have a committee reviewing their accounting practices. So what's going on with Supermicro is their auditor, Ernst & Young, quit. And this is all in the wake of the Hindenburg report, a short seller report, insinuating that Supermicro is inflating sales. Now, as an ex-accountant, I don't know how you do that. You book an order, it goes into a backlog, but I think we're probably going to find out that Supermicro has a 4 or 5 year order backlog. And whether you count that as current sales or not, is probably the accounting issue. The shortage of those NVIDIA chips is acute. Everybody wants them. It's hard to build the data centers until we improve the utility grid. But that is the conundrum with Supermicro. It was the hottest stock of the year. Got out of the S&P 500, even did a secondary stock offering early in the year with Goldman. And I don't see any analysts cutting their estimates for the stock. The issue is not earnings. The issue is how they book their sales. So I think we're going to get some clarification on Tuesday. It's too late to sell the stock, in my opinion. Also, this is the strongest stock I have for sales growth. So it's not like I have a better stock to go to, but it's been slimed by the short sellers. It's been hurt by the Ernst & Young quitting. And the people might understand, well, why isn't the company talking? And the answer is you can't talk before your earnings come out. There's a quiet period. So hopefully they're going to clarify things a bit on Tuesday. And I suspect that they will have a date for when their new auditors will announce their earnings. Now, the other thing that hurt the stock is Jim Cramer on CNBC mentioned it could be delisted by NASDAQ. I don't anticipate that. I expect the company to come through their earnings. I think the problem is going to be their sales order backlog is just too darn big. And that's a nice problem to have.
Is it unusual for a company to issue an update while everyone's watching the presidential election results?
Somewhat, because that's not the date you normally announce your earnings. But they probably want to be on record and they have to do it as soon as possible. So I'm going to give them the benefit of the doubt. And but yeah, Tuesday night everybody's gonna be watching to see which states Kamala and Trump have won, and who the next president's going to be, and hopefully, of course, we'll know on Tuesday night. Sometimes they have to count on Wednesday, and then, but it would sure be nice to have a decisive election outcome.
Do you think the presidential election will be contested?
No. I think the Electoral College is very, very clear. What's interesting is they think Trump's going to win the overall vote, largely due to Florida being such a big state. Real Clear Politics has the Electoral College a lot closer. They have Kamala winning Wisconsin, Michigan now, and Trump winning Pennsylvania. But whoever wins Pennsylvania becomes the next president. It's pretty much as simple as that. I'm very confident we'll have a decisive outcome. The lawyers are all ready to contest and fight, and that would not be good for the country. We do expect a lot of congressional races to be contested, especially in California and New York, because of where the votes are going to be close. Because whoever controls the House of Representatives controls spending. So that's a big deal. So, if we have a Democratic House and a Trump presidency, Trump's not going to be able to do what he wants to do. So that will be interesting. And of course, the House can unleash more investigations, more impeachments, and all the stuff they did before.
Moving on to Thursday with the productivity report, do you expect improvement?
Yes, that is really the secret to American growth. So AI improves our productivity. So when you shop online, you are being productive because you're not wasting time going to a store and walking around and just gawking at things. You're more efficient online. Another example is, America has these huge big box stores like Costco, and that's very efficient. Another example is the oil industry. There was a good Wall Street Journal article how that is the most efficient industry out there, and they have massive productivity gains. A lot of that has to do with horizontal drilling. You can have one well drill sideways up to 2 miles, and they drill typically in a star pattern. And that's why even in the Biden administration, which has stopped drilling on some federal lands and is not that fracking friendly, tried to ban LNG expansion. We have record, not only oil production, we have record gas production. So we got to decide what we're going to do with all these resources, because a lot of them were just like the gas, we just flare because we have nowhere to send it. We have no pipeline to put it in. And so hopefully this will get resolved. But the productivity gains are in the U.S. are massive, and And another economy that really grew with productivity gains was Japan. So um, I'm expecting that to be very good.
Also on Thursday, we have the FOMC statement. Do you expect any surprises?
Not really. We know they're going to cut rates because we had the bad payroll report. We had the PC inflation come in at 2.1 trailing 12 months. They've also telegraphed these rate cuts. But I think we want to look at the FOMC statement to see any language change. I think that what the Fed is going to have to do is lower expectations for rate cuts in 2025 because we did have a big backup in Treasury yields, and the Fed never fights market rates. So if not November and by December, they're going to have to say that we're not going to have that many rate cuts in 2025. But the FOMC statement's always closely scrutinized.
Now let's switch over to stocks. After Meta and Microsoft beat analyst expectations, why was it that all AI related stocks went down?
Well, because they're not monetizing their gains as fast as everybody wants them to. Meta, Microsoft beat. They're going to be spending huge amounts on AI. There is a growing concern that we're not going to have the power to run AI. Trump's already said he's got to literally double our power grid to do that. And the problem with our power grid is that you can put a bunch of like solar in the desert, but by the time you transmit it to Salt Lake City or somewhere else, you lose a lot of electricity in the transmission lines. That's that crackle sound you hear. That's why the birds that sit on transmission lines have such fluffy feathers. So if we were serious about some of the green energy, we'd have to put in what we call more direct current grids, which is how you send electricity a long distance. New York has a direct current grid from Quebec for hydro. California has a direct current grid from Pacific Northwest for hydro. So the easiest way to boost our electric grid is just to put in a bunch of natural gas turbines. But the problem is a lot of states are still pushing back. So we got to figure this out once and for all. Right now, we're just flaring natural gas. We're just wasting it. We've capped a bunch of wells that are leaking. And my argument is instead of having it leak or just get flared, why don't we just have it spin a turbine? Natural gas is a transition fuel. It's the cleanest burning fossil fuel we have. And again, instead of flaring or wasting it, I think we ought to have it spin a turbine. But that's only being done in certain red states, and that's what we're going to need to double the utility grid. I know the Amazon, Google, and Microsoft all want nuclear. Microsoft actually convinced Constellation Energy to reopen 3 Mile Island. But a lot of these other companies want these small modular reactors, and they're a decade away. And there's no companies that are going to be profiting from them immediately. So if we're serious about AI, we have to double the power grid. So those concerns reemerged last week. And then, of course, our stocks that support building out the power grid, increasing the data centers, they've largely announced. So it's like Eaton, Quanta Services, which is PWR, and Vertiv, VRT.
One of our subscribers wrote if you were going to keep SCMI.
Oh, we're keeping it. We're still up in it, believe it or not. We've been in it a long, long time. It's fallen in my rating system. So if you look at my rating system, it doesn't look very good right now. But I don't like to panic. I don't like the short sellers to win on innuendo. I read that Hindenburg report inside out, about forwards, backwards. I cannot find the problem they were insinuating. And being the ex-accountant I'm going to hold it. And I do want to know what the earnings are. This is not an Enron. This is not a fraud situation. It's a company that has a huge order backlog. And the question is, if you book orders 4 or 5 years out, should that be counted in current sales? I think that's the real conundrum.
Now, you had a Market Watch opinion piece on Apple and Amazon. Were you happy with their results?
Yeah, they both beat. Ironically, they're both C-rated stocks. So people are wondering, why is Louis writing up C-rated stocks? The issue is I get calls from the media. They want my opinion. So I rushed and put together an article. Apple, of course, is upgrading its computers now with the new M4 chips, which are supposed to work better with artificial intelligence. They are faster, more efficient, and so that's always exciting. Uh, Apple, after its earnings announcement, they had a couple things weighing them down. One is, Warren Buffett has sold 25% of his Apple holdings in the third quarter. The other is their iPhone sales in China, which started strong, that seemed to have tailed off just a tad. So there was just that concern. But, Apple's a monopoly. It's increasingly becoming a service company as well as a hardware company. Obviously, the phones dominate its business. So, but yeah, if you want to hold stocks for the long term, I'm not worried about Apple. In fact, your mom owns Apple and of her accounts. Amazon, which is another stock your mom owns, and I don't own it in many accounts. If I own it, it's because a client transferred it in and sold it. But Amazon is doing a lot better under the new leadership. In the old days, Amazon would make most of its money in cloud computing, the AWS division. Now Amazon's making a lot of money in retail, and as I'm sure you know, they dominate retail. Now the FTC is suing them, and we don't expect the FTC to prevail. That's Lita Khan, and she has a horrible record trying to assert antitrust action. So Amazon did gap up after its earnings report. It was a very impressive stock. And five of the Magnificent Seven stocks announced earnings last week. And so that really helped put a really good foundation into the stock market and raises a lot of optimism for the future.
Now, finally, I'd love to ask, what are your favorite stock picks right now?
Well, we've had a lot of earnings come out. We're not batting 100%, but we're batting 90 plus. And but I still love the fundamental A stocks. One of them that we've been talking about in the past was Powell Industries that gapped up. But there's a couple of fundamental A stocks I still really, really like right now. One is Sezzle, SEZL. Another is FTI. It's a chip company. And another is Energy Service Corp of America, that's ESOA. So what a fundamental A stock is a stock that's in the top 20% of sales growth, margin expansion, earnings stability, earnings momentum, cash flow, return on equity, ounce earnings revisions, and earnings surprises. So, we grade the stocks in our stock grader on these criteria. And literally these stocks are the 0.01%. I have less than 10 fundamental A stocks at this moment. And so every time I find one, I buy them. And so those three stocks I'm extremely excited about as earnings season continues.
One of our subscribers wanted to know how the gold stocks are doing as well.
Oh, they're still doing good. Gold prices are continuing to meander higher because of uncertainty about central banks. The European Central Bank is going to cut interest rates again, even though inflation in Europe just went from 1.7 to 2%. But they've telegraphed that they're going to be cutting again. We are still going to cut one or two times this year, and the Fed will clarify whether they're going to cut some more next year. So as interest rates settle back down around the world, there's just a lack of confidence in central banks. Gold prospers. Also, a lot of trade is being done in gold between China and Russia because of the sanctions. And you can go to certain places like Dubai and you can see how thriving the gold markets are. And if you like to buy gold in America, you can buy it from Costco, which is actually a stock we recommend and own. But I think several episodes ago, we were talking about our gold mining stocks like AEM, IDR, AGI. We're very, very happy with them right now.
Perfect. Well, thank you so much for answering all my questions. And once again, thank you to you all for liking and subscribing. Once again, if you have any questions, please leave them in the comments below. But until then, we'll see you next week.